the way I look at that is the gold and silver price wanted to fall this year after the spike up, after the bank failures in the spring, but it stayed steady, which I think is portending or predicting higher gold and silver prices in the fall. And I think that's what we're going to see as the inflation data comes out, as we can continue to see problems with banks and corporates going bankrupt or having severe issues, as the Fed continues to waffle on whether they're going to tighten or not, and as the economic data starts to weaken. Right now, silver is weaker than gold. That's because it follows gold, and gold's popping up a little bit. Silver may come later. We'll see whether gold has an extended run up. We don't know.
Robert Kientz from goldsilverpros.com has analyzed the trends in gold and silver prices. He expects some ups and downs in these metals, but he emphasizes their historically stable nature during the summer months as a contributing factor to possible future increases. The price of gold has now settled into a holding pattern as investors eagerly await U.S. inflation data. This data is crucial as it could shed light on the direction of interest rates after indications from the Federal Reserve about potential policy adjustments. On the other hand, silver has recently gained momentum, breaking an 8-day losing streak and bouncing back from a 2-week low. Robert highlights the interconnectedness between gold and silver prices, stating that it is challenging to predict the silver's path until we observe how gold behaves in the coming days or weeks. Both gold and silver prices have experienced gains during quieter midday U.S. trading. This can be attributed partly to a U.S. dollar index supporting these metals. Analysts note that both gold and silver are currently trading within a range influenced by rising bond yields and the strength of the U.S. dollar. Even though gold has shown resilience in 2023, some experts argue that persistent inflation, fueled by oil prices, is causing the Federal Reserve to continue accommodating policies. As a result, this poses challenges for the performance of gold. While a breakout from the current trading range is not expected for gold, some analysts believe there is room for it to test support levels around $1,900 per ounce, given the prevailing economic conditions. Robert suggests that weakening economic data reported weekly, combined with other factors, is likely to push both gold and silver prices higher. Just before you watch Robert Kientz's latest video, make sure to subscribe to our channel and give this video a big thumbs up.
Gold, as you can see right here, we're above the 250-day moving averages, meaning short-term gold is better than its basically 2-month and 6-month trends. However, you can see the overall gold trend is down since May, but since the beginning of summer, it's been even. So overall, I think that we're doing pretty well in gold, not perfectly, but okay. It's held serve over the summer, which I think is a bullish sign. It took the best shot the markets had on reducing price this past 6-7 months, and it's recovered nicely. The gold market, we can see again, trade has not been very strong this summer. That's normal. So we're dealing with prices holding steady on a weak volume. What happens when the volume returns in the fall? Will it mean gold goes into a swoon because people want to short, or will it mean gold goes into a bull market because they want to bid it up? We'll see what happens. As you can see here, contracts are already moving off of December into the next few months, beginning the year, but December is still the dominant month at 378,000 open interest contracts. On the data that we have so far on Friday, we had at close 378,000 contracts, 160,000 volume on Friday, which is a lot. It's over a third of the total volume. We had 1,166 contracts move over to London to see if they can get exposure to the unallocated market over there. We had 681 deliveries. That's Friday's data. What happened on Thursday? We had a lot more EFPs on Thursday, 4,700 contracts, no deliveries on the August contract, and we had 133,000 contracts trading. So pretty robust in terms of trade. If we go to settlements where we get the price data, this is actually as of today, as of 1:32, we got about a midday print here. The dominant contract month is still December. You see all the numbers there. We did have some volume there, estimated volume on the October contract, 6,200, but the vast majority, 181,000 contracts so far trading today, have gold trading down 1450. That's right, down 1450. And if we go back to previous periods, on settlements, that was today's data. If we go back to Friday's data, gold traded up $1.20 on the December contract, and on Thursday it traded down $7. So again, it's back and forth, up and down, no specific movement. Looking at London Vault data, not a big change. We do have the July number here, July numbers here. They're really, we should be getting August any day now. Gold is slightly up and silver is slightly up in terms of what they're reporting on the unallocated market. That's just stocks more than anything. And again, that's unallocated, so it's not really guaranteed to be a full representation of that market or of the liquid availability in that market. But I report the numbers to show the overall trend. And it does mimic sort of what goes on in SLV and GLD, because that's where they store most of the gold and silver for those retail funds. So we like to talk about it. So to some, economic data not looking good. Inflation has started to tick up. The inflation bout that we had before and the tightening by the Fed has led to a tightening in the economy, job layoffs, a record number of corporate bankruptcies this year. Wages are stagnating relative to inflation. That's led to workers striking. You're starting to see it around the world, not just in the US, but all over the place. It's led to some unrest. I think that, along with the weakening economic data that I report on every week, is going to spur higher gold and silver prices. Gold and silver so far haven't really reacted, although they held serve in the summer. There's a little bit of fade from the May prices, but over the summer they did pretty well.
Robert notes that silver is trading above its 250-day moving average and has rebounded from recent weeks' dips. On Monday, spot silver increased by 0.61% to reach $23.09 per ounce, partially recovering from the previous week's losses. Market sentiment for silver appears cautiously bullish in the long run despite a recent sell-off. Both technical and fundamental factors influence this sentiment. Traders are closely monitoring upcoming U.S. inflation data and Federal Reserve policy decisions. There is a 93% likelihood that the Federal Reserve will maintain its interest rates in September, with a 43% chance of a rate hike before 2024. Regarding the recent performance of silver futures contracts, they have experienced a 69-cent decline on the December contract. This contrasts gold contracts, which have seen active trading and closures. Additionally, there have been retail outflows from the SLV ETF.
Silver's a little bit different. It's up on the screen right now. You can see it also above the 250-day moving average. It's recovered from the last couple of weeks where it had a little bit of a mini swoon as we approach the end of summer. It's back above it, but you see a declining wedge here. As you can see, if I draw a line from the previous top to here, it's declining. And then if I draw a line here, it's a wedge. And it is a bit of a declining wedge overall, but the trend for the last 50 and 200 days is actually up, especially the last 50 days is up. So even though we're in a declining wedge in the silver market, the last 50 days is positive. Looking at the volume and open interest on silver, a lot more trade, relatively speaking, on silver than in gold. And the dominant month is, again, December. That's where you see the big numbers, a little bit of trade here in October, but not much. And we see on Friday's data, 61,000 contracts traded, only 288 deliveries on the September contract. EFP's 575, pretty muted. If we go to Thursday's data, much like gold, we have more EFP, 770 contracts of 5,000 ounce gold, 47,000 contracts basically closed last Thursday. If we go over to settlements, we're looking, again, a half a day of today's data, Tuesday, September 5th. You can see up here where I'm waggling the mouse. On the trading data, we get it not quite real time, but we don't get it a complete day in arrears. So far today, silver is down 69 cents on the December contract. A little bit of trade on October, down 67 cents, sorry, not much. If we go back to Friday, we see silver traded down about 25 cents on the December contract on the strength of a volume of 61,000 contracts overall. And we'll look at Thursday to give another day's view to see what happened to end the week. It was down. So silver was down the majority of last week, but look at what's happening to silver. It has continued in the retail side of the market on SLV to see outflows. And silver here, where the deliveries have been muted. For example, in the December contract, the most recent trading day, we had 61,000 contracts trade and only 288 deliveries. That's a very minute percentage. Over in Shanghai, they're having 72% of gold and 16.55% of silver delivering on the month. So if you're taking your gold and silver from the U.S. over to Shanghai, you would make $59 per ounce on a contract if you can do that, sell contracts in the U.S. and buy contracts in Shanghai. But it means the physical price is more than likely to go up.
Considering the analysis provided by Robert Kientz, how do you think the interplay between economic data, Federal Reserve policies, and technical factors will shape the future trajectories of gold and silver prices? And what potential opportunities or challenges do you see for investors in these precious metals? Share your thoughts in the comment section. If the video resonated with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.